Hello and welcome to another part of Bud Parks where you can recognize the structure of the market and draw it correctly along with its important parts. It is the first step that every trader must take in order to be successful and profitable. One of the main problems that many traders suffer from is that they cannot recognize and understand the structure of the market. In this section, we explained all the basic concepts and all the reasons behind the market structure, things that every trader should understand and use in his trading. In addition, we are going to reveal to you the generalities and important points of the market structure so that you are one step ahead of the others in the market. Be sure to watch the video carefully and take notes to have a better understanding of the content. Well, if this topic is interesting to you, be sure to like the video to show your support, and if you are new to us, subscribe to the channel to follow the new video. Welcome. Let's go to the general behavior of the market. The mechanism of market movements can be summarized in two main factors that always affect the direction of the price. The first is the market trend, which includes the Saudi and downward trends, and the second is the stabilization stage, such as the range or new markets. The price always moves between bearish and Saudi trends, as well as fixing phases, where liquidity and sensitive orders accumulate. The price usually enters the stabilization phase before changing the trend between the profitable and negative trends and vice versa. The first year, when you return to the chart, you have to ask yourself whether the market is in a downward trend or is moving in a stabilization phase. For a deeper understanding, we will first start with a simple example of market structure and then go to the key points of advanced market structures. Let's consider a market structure that shows an ideal Saudi trend. I call this type of market structure ideal because it is rare to find a Saudi trend in the market that follows exactly this pattern. Prices usually do not move so easily and predictably. However, to better understand the Saudi process, let's take a brief look at this ideal structure. Before dealing with the actual structures that are frequently formed in the market, it is better to see an ideal example. In a Saudi Rwanda, prices continuously form higher peaks and higher bottoms. The price usually breaks the previous peaks while holding the bottoms. A Saudi trend ends when the price of one of the important floors goes down. For example, to maintain the Saudi trend, it is very important that the price of this important floor does not break. Whenever the price of an important peak goes up, such as a structural failure or BS, and a region of turmoil related to this structural failure is created, identifying important peaks and bottoms. And valid is very important because it helps us to identify trend change or continuation signals in the market. Without correctly identifying these critical points, there is a risk of falling into traps and trading in the wrong direction of the market. The same concepts are true for Najili scenarios. In a downtrend, prices continuously form a series of bottoms and peaks. For example, in this scenario, the price tends to break the previous lows while maintaining the highs. Now let's examine the real structure of the market in detail. This is the representative of the real Saudi trend structure, which is mostly seen in the market. Now let's consider a scenario where the price breaks the previous peaks. At this point, a vital question arises. How can we identify authentic important grains and floors? To answer this question, if we look at the left side of the structure, it is clear that the price experienced a Saudi movement and then started to return. The highest point reached by the price before the return movement is considered as an important peak. This lower point of the Saudi wave, which started the upward movement and led to the breaking of the structure and a new castle, is known as an important bottom. These 2 points form important external structures, and any structure formed between these 2 points is considered as an internal structure. If the price breaks the important fortress to the top, it creates a breakdown of the structure or bevis, which indicates a signal for the continuation of the trend. But if the price closes below the important floor, we should consider it as a signal to change the trend or to change the cricket. Specific internal price movements within the limits of external structures do not hold much hope as long as the price remains above the most recent important floor. As long as this condition is met, we consider the market to be in two Saudi states. Now that we have identified the external structures of the cerebral cortex, these structures determine the current area of interest and the current trading opening. As far as we can see, the price of Barta Pass has returned and created a series of internal structures instead of noduli structures. After that, after Shakiri, a Saudi internal alignment, the price breaks the recent important peak upwards and creates a new peak, which we consider as a new peak. The new important floor is the inner floor, which is located at the end of the structure. This floor is considered as an important floor because it is the last floor that was created before the start of the profitable movement of the price and led to the failure of the structure. You may be wondering why we do not consider this floor as an important floor. The reason is that the floor located at the end of the structure is the last and lowest point that has doubted the price before the start of the Saudi movement. This makes a lot of sense because it is the key point that started the Saudi movement and ultimately caused the failure of the structure. Now let's go to the downward scenario, which is actually similar to the Saudi scenario, only this time a downward wave will begin, which will lead to the failure of the structure. In addition, we have an important floor, which is the lowest point reached by the price after the structural failure. These two structures, i.e. the peak and the bottom, form the important external structures, while everything that takes shape between these two is considered as the internal structure. If the price breaks down the important floors and creates a breakdown of the BOS structure, this is a sign of the continuation of the downward trend, just like what we see here. But if the price goes above the important peak, we should consider it as a signal of a change in trend. Simply put, internal price movements within external structures do not matter much. As long as the price remains below the last important peak, it is considered a valid bear market. When the price corrects upwards, it forms a series of internal peaks and bottoms within our trading range. However, in the end, the price returns to the bottom and breaks the recent important bottom. This internal herd, which is at the end, will become our new important herd. Because this peak represents the highest internal peak that was created before the strong downward movement of the price and led to the failure of a new structure. After that, the price corrects again and forms another important bottom. After that, after the different internal structure, the price continues its downward movement and forms a series of bottoms and a series of bottoms. Now we want to address another aspect of the market structure, which is very important to break the BOS structure. You probably got to know the widow in various trading training courses, smart money videos, and Rama trading books. For example, in the simplest case, in a Saudi structure, the failure of the structure is usually defined as a situation that breaks the price of a castle upwards and actually continues. However, in the reality of the rules, there are certain points that you should consider in order to identify a structural failure. Now let's review those key points and rules together. A valid structure breakout occurs when the price of the last higher grain breaks and closes with a solid body. This is true even if the price moves down immediately after the break of the structure. It will still create a new important cap in the price scenario and form a new trading range. If the price later breaks this new important floor downwards, It is a sign of a change in the reliability trend or a change of character. But if the price of the higher peak is raised by the shadow, and the body of the candle closes quickly below the peak range, or if the next candles do not pass the first candle, we do not consider this as a valid structure failure, so it must be. If the candle is closed with a high wind, it means that it is close to our important tops or that it is a high wind. And the next shoddy should pass the western shoddy. If a shoddy goes up and then comes back, it closes, and the worst shoddy does not pass the western shoddy, it will not form. Well, in this case, we consider this floor as an internal structure that is formed within our trading range. To identify a valid trend change signal, we have to wait until the price of an important floor. If he breaks the entrance doors, he should definitely break this important floor. Now consider another scenario where the recent higher grain price breaks with 1, and then the body of the first candle closes below the grain range. Now, if the next candlestick crosses the first candlestick, we can consider it as a break in the profitable structure. In this case, a new important peak and a new important bottom are imagined, which again defines our current transaction. The type of internal price movements within the limits of this peak and floor is not very important as long as the price remains above our new important floor, which represents a Saudi market in flower. Only if the price of the newly formed floor breaks downwards, we can consider it as a valid change signal or a valid character change. Now let's briefly examine the Najili scenario, which is basically the same as the Saudi scenario. Consider a Najili market structure. In order to have a valid structure person, we need the price to break the recent lower floor and the body closes below it. Therefore, if the new important castle moves up, take it as a signal to change the trend, since it shows that the players are losing control and vice versa. If the price breaks the recent lower floor with a long run and the frankincense body immediately closes above its range, and if the next candle doesn't cross the first candle, we don't consider this as a failure of a valid structure, just like the Saudi situation. To create a real bearish structure breakdown, we have to wait for the price to close below the floor limit with the body of a candlestick. In fact, the close closes below the floor. On the other hand, if the level of the next candle crosses the level of the first candle and closes above the bottom limit, we have a valid structural failure. In addition, we have to update our important new bottoms and peaks until the price remains below our new important peak, and in this case, we will take the direction of the market to go down. Only if the price of the newly formed castle breaks upwards, we can consider it as a valid trend change signal or a cricket change-off. Now that we have examined the different types of scenarios of the reasons for the structure failure, and we have the same structure failure node, there is another key factor in understanding the market structure. Let's check together the change of character to identify a valid trend change. The first step includes determining the general direction of the market, whether it is in Saudi or downward trend. After that, you have to specify the failures of the valid structure on your price chart. In the Saudi scenario, imagine that a price creates a series of valid structural failures. These are the bottoms and herds of our important structures that lead to the first reliable Saudi structural failure. It has been mentioned that any price movement that is formed between these two structures is considered as an internal structure. The ergos of smooth change can be divided into two types, minor and major. For example, every time the price of any interior floor goes down, it represents a trend change. It is important that there is a change in the minor trend alone. It cannot be taken as a sign of a change in the main structure of the market. Here we are facing a common scenario that often happens in the market. Many beginner traders who do not recognize the market structure correctly often mistake this minor trend change for a sign. They rightly consider the market trend as a signal to confirm the direction of the market. They believe that the profit phase is over, and now is the right time to sell. And usually, they place their instruments right above this internal peak, so contrary to their expectations, the price will move up again after a cattle return, and the Saudi trend will continue. And the reason for blaming the traders is that they take sell positions here. Well, they often don't understand why their stable is activated at all, and unfortunately they repeat the same thing. The key thing about the loss of column is that the price is still at this important and unbroken floor, so that we can say that the market structure has changed. In general, one should not enter a push position until the price breaks the last important floor downwards, that is, the change of Rwanda, which was identified as the clan of the Madabar. And the price is only in its correction phase to continue its main trend again and create a valid signal to change the market structure in the future. So we have to be patient and wait until the price makes a change in the main trend, that is, the last important floor that started the profitable movement, and the failure of the bullish structure breaks and closes. In addition to this, you should also remember that in a Saudi scenario, the first change in Rwanda is valid only when the price breaks the last important floor with the body of a candle and closes below it. If the price breaks the last structure and enters the hard season range, this change is not rational, and we cannot consider this as a change in the market structure. The same concept applies to the Nozoli scenario as well. In order for the change to be smooth and to have a high probability of success, there must be price penetration. It is not acceptable with close and with shadows or clans. In other words, if it is difficult for you to identify Beavis and CHoCH characters, or you want to do the work quickly, you can use Bad Paris, which will do this for you easily, and put everything you need for market and trade on your chart and can be, in fact, execute and manage your transactions manually and automatically. Well, thank you for watching the video. I hope this video was useful and informative for you. And don't forget to hit the subscribe button and turn on the notification to be notified of our new video. We hope for your feedback and suggestions. So please write your opinion below and tell us what topics you would like to be covered in the future. Thank you for your support, and we look forward to seeing you again in the next episode.